Hi guys, it's Dee again with Crystal Metz Insurance Agency. Super excited to talk to you today about permanent life insurance and term life insurance while I paint these beautiful flowers. Permanent life insurance, term life insurance. In the perfect world, we all would have both. Permanent insurance is designed to meet your long-term needs. The premium amount and the benefit amount are guaranteed, meaning your premiums will never ever go up. Nice, right? Your beneficiary will receive the amount of insurance that you choose. Okay, there are some permanent life policies that can be paid up. And what that means is that you can basically pay for it within 10 years, within 20 years, by the age of 65, whichever you choose, and be done and not have to pay a penny more, but still have the life insurance in place forever and ever. Amen. So they are taking those premiums and condensing them into the 10 years or 20 years or to age 65. Although they seem quite a bit higher at the time, you're actually saving quite a bit of money by getting a policy like that in the long run. It's like taking out a loan for your vehicle. Think of it that way. And you can insure yourself for $25,000, $1 million, $2 million, whatever you decide. And at that time, it's best really to talk to your specialist to be sure that it's fitting you and your needs. Term life insurance. Term life insurance is exactly how it sounds. It's for a term, 10-year, 20-year, 30-year, up to you. And your premiums are guaranteed for that term. And the amount paid to your beneficiary is guaranteed for that term. But be aware, term policies will increase upon renewal. So make sure you speak to your specialist again about that and what that looks like for you at renewal time. Term policies are a good choice to cover things like loans, debts, mortgages, income replacement. Over our lives, we do actually tend to gain more debt. You may buy a new car today, and 10 years from now, you may buy a new house. At the time, you only needed the term policy to cover the one vehicle loan, but now you have a house, so you would probably go get another policy. I'm going to talk to you now with this on my face. So your term insurance for a mortgage is really popular. Say if you had a 25-year mortgage term, you would get a 30-year term policy for the amount of the mortgage, or a little bit more, depending on what you need. During the term that you have your mortgage, you will know that if something happens to you, your loved ones are going to receive that money and be able to pay off the house in total as your plan. Life insurance is for the ones you leave behind, okay? So that you're not leaving them in a situation where they don't know how they're going to keep paying the bills. So you pay the bills for them, and you would want the same from them. Permanent policies are really great for funeral expenses. So whether you go now or 102, nobody's left this world alive. So that is the number one reason you would need a permanent policy. Funeral expenses right now, I think they range between $6,000 and $10,000 for just a simple funeral. You're going to need a permanent policy to take care of that so nobody is left with that bill. So that's the difference between permanent and term insurance, and again, the very basics of it. Be sure to speak to somebody, figure out what suits you and your situation. Permanent insurance, basically, you own the policy. It's going to pay out, guaranteed. Term insurance is for debts that you may have, your mortgage, income replacement, and in the perfect world, we all have both. And there you have it. Thanks for watching, and we'll see you next time.